Yo, we're going to be talking about the first trade that I actually lost in quite a bit. So, this was actually not the strategy itself wrong, but more so me. And we're going to talk about what I did wrong. It's very obvious. And why is it that I lost so that you guys can pretty much learn from it. So, it was this day right here that I lost. The one where, well, let's just zoom in from the first place. So this trading day right here is where shenanigans happen. This trading day specifically is different from all other trading days. There is a rule, well set rule, that I do not break in general. I would say ever, but I just broke it that day, and it was trading on CPI day. So daily time frame is clearly expanding, right? And I can tell that what bearish structure is here, right? And we are going up and up. So I'm anticipating, quite simply, this thing to continue going higher, like it did after. So with that being said, I was just like, okay, this is a half decent setup right here. Daily time frame can be assumed to go higher, therefore bullish. The 4-hour time frame, as you can see here, is also bullish because of this expansionary move right here, right? From this black candle, expansionary move, breaks of structure, 4-hour, bullish. Then 1 hour, same case, bullish, right? We get a liquidity sweep right here of a low made during London session. But nevertheless, the hourly, as I just explained, just similar to the 4-hour, is bullish. So as always, like you guys see in all of my videos, you can see that the time frames are actually aligning, and that is the standard. But if you trade in the wrong conditions, even if you have alignment, price is more prone to make a liquidity sweep and take you out. Okay, so what do we see right here? We see the hourly, who's also bullish, the 4-hour, who's also bullish. So now we scale down to the 15-minute, just like we always do. And in this case, 15-minute coming into market open is what? Bearish. So a 15-minute is bearish, and we see a push higher in this direction, but we never actually break structure here. That means that if I were to take a bullish trade, it would have to invalidate the 15-minute structure, because we want all structures and all time frames to be valid, right? So 15-minute structure is invalid, right? That means we need the 5-minute structure to invalidate it so that then we can continue with our bullish bias. So what do we see clearly right here? We see the 5-minute break of structure. It's an internal break right here, but we see this break of structure. So this is where I make these mistakes. So this is kind of where the inefficiencies start within the whole thing. So when market opens here, I'm pretty much thinking in my head, 8 a.m. market open, boom, we got an expansionary move. Let's get a retrace. So my measurements of equilibrium at the time started from here, considering this the expansionary move. But normally, not that that's bad, you're better off trading within this range, because this will make sure that you are going to be trading within discount of the overall range and not the low time frame range. That way you can protect yourself from liquidity sweeps that may occur and use price to actually justify entries lower than discount, like this fair value gap right here, like this order block that I marked out. So let's scale down, because when I entered the trade on the 5-minute, it was still valid. Sorry. Please stay with me, guys. You don't need to click off. Focus, okay? So here, when we take this trade, you see that price actually pushes up. So we are still bullish on the 5-minute. But what ends up happening? Boom, 8:30. Right before 8:30 news comes in, we get one beam down and then a beam right back up. So let's see exactly what happened on the 1-minute, because the 5-minute being bullish helped us invalidate the 15-minute structure. But nevertheless, what do we say to enter? We need to see liquidity get taken in the opposing direction of the trade, so that then we are able to enter from a safe standpoint. Bear with me, okay? I just don't want to go and zoom out and then find it, because we're literally right there. So here it is. Right here, you can pretty much